As the ceasefire between Iran and Israel seemed to hold and the treasury market increased its bets on interest rate cuts, Asian stocks rose, tracking a rally on Wall Street. And Asian stocks gained early on Wednesday, extending a more than 2% rise in the previous session. U.S. equity futures held steady after Wall Street bulls drove stocks higher amid easing West Asia tensions. Balanced comments from Federal Reserve Chair Jerome Powell on prospects for rate cuts also boosted sentiment. The S&P 500 closed over 1% higher and the Nasdaq 100 climbed 1.5%, notching its first record since February. As traders assess the Iran-Israel ceasefire, treasuries in the dollar steadied after Powell's balanced comments. Powell said lower inflation and weaker hiring could lead to an earlier rate cut. The dollar was mostly weaker against most major peers. The Australian dollar swung after monthly inflation data missed estimates. The risks facing stocks are swiftly diminishing as economic growth remains solid despite the turmoil from tariffs and geopolitics. Stocks have been remarkably resilient over the past 2 months as the S&P 500 bounced sharply from April lows. The Wall Street benchmark is less than 1% away from its record high. In commodities, oil edged higher after posting the biggest two-day decline since 2022. Traders continue to assess the Iran-Israel ceasefire and an industry report that pointed to another drop in U.S. crude stockpiles. Brent crude rose about 1% to near $68 a barrel after slumping 13% over the past 2 days, as crude was above $65 a barrel after plunging nearly 15% over the previous 2 sessions. Gold held a decline as demand for safe havens eased. Bullion traded little changed at around $3,325 an ounce early in Asia after closing 1.3% lower on Tuesday. Geopolitical uncertainties along with trade tensions and central bank buying have seen gold surge 27% this year. That includes a rally to a record of around $3,500 in an ounce in April. While the rise has paused, bullion has been mostly fluctuating between $3,300 to $3,400 range over the past month. And for more on this, we're now being joined by Mithali Nikor, economist and founder of Nikor Associates, live from Delhi. Thank you so much for joining us on World Business Watch. Good morning, Mithali. How are you?
Good morning, all well. Let's see how the things play out across the world.
Absolutely. And to that, my question is, latest market moves show return to normalcy. What is your outlook for the rest of the week?
No, I think, the markets are definitely celebrating because we were on the brink of one of the worst global economic crises in the last week. Because if we had actually seen the war between Israel and Iran play out into an extended conflict, and if we had seen Iran actually block the Strait of Hormuz, we would have actually found ourselves in a very tight spot economically and affecting every single country, not only the region, not only the Middle Eastern region, but affecting the globe because the Strait of Hormuz actually controls nearly 20% of global oil movement. So in such a scenario, it was quite clear that the conflict should not move in that direction, and de-escalation has brought cheer to the markets.
Absolutely. And 6 months in, it's safe to say perhaps that 2025 has been volatile with Trump policies shaking up traders. Now, how do you see that play over the coming month?
So I think the other point is to see what is the new hat that this magician is going to take out of his, what is the new trick that he's going to take out of his hat. And we're going to see, obviously, something or the other, that keeps getting announced, some new tweets, some new posts on Truth Social. But unfortunately, since they come from the President of the United States, they have the power to shake the markets across the globe. So I think to some extent, the markets are already factoring that in, that, there are certain things that are announced and may not have 100% credibility. And therefore, the reaction in the markets is now no longer immediate. So the markets have themselves become a little, resilient to these announcements and tweets. However, if the geopolitical tensions in Iran and Israel flare up again, or if, we are not able to see more of a move towards de-escalation, in the Middle East region, definitely I expect the markets will start to slide once more.
Right, Mitali, never a dull day indeed. How do you see Trump's push for lower oil prices then play out?
So I think in this particular direction, he's done a lot of work in terms of diversifying US oil sources as well. There's also a lot of moves that have been made within the US domestic market to ease up, oil exploration in areas that were previously banned by the Environmental Protection Agency of the US. And a lot of that deregulation is actually going to help the US in reducing domestic oil prices because they might actually go to supplement domestic oil resources in the US, which is something that has not happened, if you notice, in the last 2 to 3 decades. So this is really a move, which is unprecedented by the US administration in this Trump era.
Right. And unprecedented seems to be the word of this year so far. That being said, Mitali, thank you so much for joining us on World Business Watch with your insights and perspective on this. It's always a pleasure to have you with us.
Thank you so much for having me.